Right, so we have some information about the global personal luxury goods industry. So as we see from this couple of pages, I'm not going to spend too much of time on these couple of pages because these are general information. So let's just rush through these paragraphs. Now, the 5 product sectors of this industry is given to you: cosmetics and fragrances, right? So that involves makeup items and perfumes, jewelry, watches, bags and accessories, which is of course what Mansako is dealing with, and finally clothes and shoes. Now keep in mind that although Mansako is looking at bags and accessories currently, there's always the potential to move into the other 4 sectors because it's covering the overall, it's within the same or common industry overall. So we see that the market for personal luxury goods fell by just under 1% in 2017, and the reasons for this are given as political instability, worldwide political instability, and also the UK's exit from the EU, the Brexit. Right, so we see that this continuing trend of no or very low growth represents a major shift in a market where companies had come to expect favorable market conditions and free spending consumers. And also it goes on to say that it has resulted in lower consumer confidence. So as you are aware, as I mentioned earlier, customers generally purchase products relevant to Mansako through their disposable income. And as we know, when the economy kind of comes down or faces some sort of a recession, or it has not picked up in a while, the total income of people may generally fall, and that would give them less disposable income, and that would reduce the demand. But here, as we see, it just fell under 1%. Now we can't take this too lightly because generally you would expect an increase in year-on-year demand in terms of quantity as well as the value. Quantity, of course, due to the population increasing, and value due to inflation. But despite the constant exchange rate, we see that overall it fell by 1%. Now, a very important piece of information given here: the sales of personal luxury goods by the top 100 companies in the world exceeded 200 billion. 40 of the top 100 had more than 1 billion. Right, those are the huge players in the market. And as we know, Mansako, if you refer to their financial statements later on, we see that their revenue is around 219 million. Right, so the threshold level to come to the top 100 is 180 million, and we see that Mansako is ranking as the 90th largest in the world for personal luxury goods. So it is quite a huge achievement. It is quite a considerably large company, right? And definitely with the increasing research and development for new products and new designs, and also if they tap into the other markets that they haven't gone into, and along with that improvise their online marketing strategy, improve their own outlets and so on, definitely it can come into the 80s, 70s, and gradually climb up. Then regarding the bags and accessories sector specifically, we see that it's accounting for 30% of the total personal luxury goods market. Now that was honestly much higher than what I expected. So among the 5 categories, bags and accessories accounting for 30%, that's quite a significant amount. And the growth rate seems to be promising at around 3%. This sector has grown the fastest since 2009 with a compound annual growth rate of 12%, but growth over the past few years have slowed significantly. So 12% annual growth, that's a huge amount, and last year there was a 3% growth, and as we see, the growth rate has slowed down significantly. Now, in future, we can expect possibly expect the world economy to pick up, and if that's the case, then we can expect a higher growth rate for this sector and even for Mansako. Among the top 100 players in the market, there are 15 companies whose sales revenue includes substantial sales from bags and accessories. These companies include the major French and Italian fashion houses providing high-end luxury products, and American designer brands providing more affordable luxury. So as we saw in the page regarding market positioning, Mansako was somewhere between these two, right? So Mansako products were less expensive than this French and Italian brand, but more expensive than the American brands. So somewhere in the middle, although Mansako can't completely ignore about French, Italian and American brands because they're in the same industry at the end of the day. The affordable or accessible luxury segment first emerged in 2014. This price category fills a void in the market, so it provides an entry-level luxury option for consumers who seek to trade up from mid-price goods but are still either unable to afford to or do not want to pay the significantly higher prices. So millennials and generation Z, that's individuals between 18 to 34, they seem to be representing the strongest demand for this price category since they seek value for money while simultaneously seeking a higher quality of life. So Mansako's strategy should ideally be to convince the customers that the products are of high quality and how it would illustrate, how it would reflect them to the outer world when you use Mansako products. But then again, the price to value proposition should be carefully managed, because if you price it too low, then the whole message won't go out, and if you price it too high also, the customers may not exactly want to buy these products because they are millennials, right, and their income levels may not be very high. Then some information about the market trends. We see that the Americas and Asia contracted by around 3% in 2017, so not very good news. Europe also contracted by 1% due to decline in tourism. But some promising information is the growth rate in China. In China, the market grew by 4% following 3 years of stagnation. Now that is good information because as we saw, Melanie Zhang, the sales and marketing director, she seems to have plans on moving on to the Asian market and capturing more market share, and she has previous experience. So China may be a potential market that they can strongly enter into, although cost efficiency also has to be looked at, because as we know, China is a country where the labor cost is cheap and it's very tough to compete with their products in terms of price. So rather than price, Mansako should look at non-price competition, or rather go with the quality of the product and tap into the mid-income as well as high-income class of China. So sales by third-party retailers represent 2/3 of all sales, right? So it makes sense because these third-party retailers, they would be specialized stores, or they might have a range of items. So customers would generally visit such stores to buy many items from under one roof, right? So that would be a good opportunity to connect with the customer by supplying goods there. And as we see, the direct retail channel is also growing steadily because the companies want to increasingly seek to control the experience they deliver to customers. So when you have your own outlet, you can decide how to arrange the outlet, how to place the products, and you will have specialized employees dealing with customers and so on. Now we see that sales in discount retail stores are also continuing to grow, and it has reached around 11% of the total sales of the personal luxury goods market. And another fact given here is that discounted sales are 37% of the personal luxury goods market. So this probably means that out of all the sales that were done, 37% were where the customer was given a discount, right? Now generally we know that luxury goods and discounts don't exactly go parallelly, but then again there will be segments within the luxury goods market, right? So maybe for French and Italian brands there might not be discounts given because it would kind of tarnish the brand value. But for the mid-level, American designer brands and even Mansako's own brands, there might be a generous level of discount given. And even for the department store's own brands, as we saw, low price points. So it's clear that in the future, luxury brands need to be more disciplined and strategic in how they handle off-price sales, right? Because giving discounts can do two things. It can cannibalize sales, and the second thing is it might harm your brand value, right? We see that online sales are also growing rapidly, and that's around 8% share of the global market. And new technology has changed the way that companies do business. So this is definitely information that Mansako has considered. That's why they want to increase the share of online sales from their total sales. Consumer buying behavior is evolving with the emergence of a new customer segment, the millennials, once again 18 to 34 years, right, that age range. So 42% of their purchases are made either via computer or mobile devices. In other words, it would be made online, right? So there's a constant need to innovate within the digital world where immediacy is the key. This seems to contrast with the exclusivity which is at the heart of the luxury market, right? So more and more innovations have to be presented by companies if they want to continue and survive. Now, despite the increase in digital sales, we still see that 63% of luxury goods purchases still takes place in a physical store, but it may simply be a matter of time until the numbers go down from this. Now we saw how Amazon captured the global market, right? And ever since they were launched as a e-commerce site selling books, from that time onwards until now we see a gradual increase in the percentage of online sales, right? So sites such as Amazon and eBay, they have played a crucial role there. And it might be a matter of time until specifically the luxury goods market also catches up with that. And another interesting piece of information we see here is that the affordable luxury segment is gaining market share at the expense of the high-end luxury fashion houses. So we cannot exactly isolate the French or we cannot forget about the French and Italian brands, as I mentioned earlier, because it will be heads-on competition, as this industry article says. And finally, about the marketing strategy. Marketing and advertising represents a significant cost, and we see that digital marketing is gaining share in the advertising budgets, right? So we know that traditional marketing techniques are losing popularity. Okay, so digital techniques like search engine optimization, content marketing, or YouTube, Facebook, and so on, social media rather, becoming more and more popular. Now there are ways of advertising free, although it's not so effective. So companies have to spend a considerable amount on boosting their posts and putting out advertisements online, right? Communication media is now so diverse that companies can only allocate budgets for some of the channels, right? So maybe the traditional channels, they have given less priority to it because of it not being very effective. Right, moving on to the last part of the industry article regarding the outlook for the future. So market is expected to grow at 3 to 4% through 2018 to 2020. The rising Chinese middle class should continue to spur growth in luxury goods purchases. So as we discussed earlier, China is definitely a market that Mansako should keep an eye on, especially because the middle class, which would be in line with the pricing or the value proposition of Mansako products, that's expected to increase. Discounted sales will remain a sizable component, but companies will need to handle them into a more strategic manner to reduce cannibalization. So Mansako also has to be very careful here, because providing discounts for each and every sale could harm the brand value, and especially now their own retail outlets won't be much of an issue, but when it comes to third party retail outlets, if Mansako starts giving discounts, the other competitors will also follow the same. Then Mansako might give even a larger discount, and this will just go on until companies give the highest possible discount at the expense of their top line. So companies have to have some sort of an agreement so that the industry sales are safeguarded. Digital sales will continue to grow at a higher rate than other market channels, right? So nothing surprising, right, due to the increase in technology. And it seems like the critical success factor is how well the companies are moving on to the omni-channel distribution method, right? Now, of course, the quality of the product is important, but how the product gets to the customer also is extremely important in achieving success in the industry. Travel and tourism still presents the greatest growth opportunity. So we see that half of the luxury purchases are made by consumers who are traveling, either in a foreign market or while at the airport, right? So that's 31% and 16% respectively. And this proportion rises to 60% among consumers from emerging markets, who typically do not have access to the same range of products and brands that can be found in the more mature markets. So possibly we are looking at a lot of African and Asian countries, since when they travel they will be exposed to better quality of different products. Now there's a tendency generally for travelers, when you travel to a different area, whatever you see, there's a psychological impact that okay, this is something new. So even if you find a similar product in your local market, you might be tempted to buy this particular product in this other country because of this psychological impact, right? So this is also triggering a lot of sales, right? Okay, so moving on to the numbers. Now I have some ratios calculated, but before we look at the ratios, let's have a general overview of the numbers. So the top line revenue has increased from 202 million to 219 million roughly. So that's an increase of around 7.86%. So despite the overall luxury market reducing slightly, we see that Mansako's sales revenue has increased by 7.86%. So that's much higher than the industry, although they need to look at how well the other competitors have performed. Cost of sales has also increased along with the gross profit. Now when we look at the ratios, we see that the gross profit margin is pretty much the same from last year to this year, a very slight negligible reduction, but seems like they have maintained similar margins, and the level of discounts seem to be same. Maybe a little extra discounts may have been given in 2017, because 61.95 has gone to 61.78. Operating expenses have increased, and other operating incomes, this might consist of profit or loss from disposal, interest received, and maybe any other revenue streams, possibly royalty payments, right, due to sharing any designs and so on. So the operating profit has increased from 8 million to 9.7 million, and if you look at it as a percentage, 4.03 to 4.48%, a slight increase. in the operating profit margin, which looks good. Finance cost has reduced from 81 to 4, and as we move on to SOFP, you will understand that they don't have any borrowings at the moment. So taxation has slightly reduced despite the profit increasing, possibly due to under provisions and maybe some allowable expenditure, right? So we cannot exactly judge the tax amount from the profit amount, right? So the overall performance has definitely increased. So moving on to the balance sheet or the SOFP, intangible assets have reduced. So intangible assets consist of computer software cost. The accounting policy is to treat software cost as intangible assets. So nothing wrong with that, because software can generally last for a couple of years, and it would make sense to treat them as intangible assets and amortize them over the life of the software, after which you expect it to get outdated. Tangible assets have reduced, and as we move on to the cash flow statement, we'll understand the reason why. Inventories seem to be quite significant, and the inventory days are 273. Last year it was 273 days, and it has reduced by 30 days in 2017. Nevertheless, this is a long time. So if you look at it in terms of months, it's around roughly 8 months, right? So keep in mind that this inventory consists of raw materials, work in progress, and finished goods. So luxury bags or handbags are not exactly a very fast moving item, right? So they have 119 retail stores globally, and they also have online sales going on. So due to this, it may be necessary for them to hold a high level of inventory. So maybe that is the industry norm, right? For inventory days to become this high, possibly. Receivable days, so this is mainly consisting of the amounts receivable from third-party retail outlets, and that would be 32 days this year. It has slightly increased. So maybe Mansako is looking at giving a slightly higher credit period for retailers, so that they are motivated to equip or accommodate the products of Mansako, because we know that there is competition in this industry, right? Cash and cash equivalents. Well, they have a very high cash balance, 18.2 million, and now it has increased to 24 million. So maybe they are saving up, or maybe they are stocking up cash for some future investment. Possibly they might want to invest in a new factory or in a new distribution center, or open up more outlets and so on. It can even be possibly because the management is risk averse when it comes to working capital, right? So we see the working capital cycle is 114 days. It has reduced from 127 days, which looks good. And looking at trade payables are pretty much the same. In terms of payable days, it has slightly reduced. Maybe they are settling our suppliers a little faster. Then when it comes to share capital and share premium, it's the same. So no new share issues made during 2017. Now keep in mind that this is a listed company, and it might have a share price, although share price is not reflected in our financial statements. Retained earnings. The increase in retained earnings is due to the increase in profit. So if we look at the dividend payment, let me quickly move on to the cash flow statement. We see that they have made a dividend payment of 2.3 million, which is exactly the same amount made last year. So that's not too bad, because we made a profit of 9.7 million and we have enough cash reserves with us. So the question is whether shareholders find this adequate, right? Then we see no non-current liabilities at all, and even in current liabilities we don't see any borrowing. So if you're wondering how there is a finance cost, remember that what we see in the SOFP would be the year-end balances. So possibly they might have, made the borrowing within the year and might have settled it within the year itself. So if you make a borrowing and settle it after a couple of months, still finance cost would be relevant. But if you settle it before the year end, the balance would not be reflected in the SOFP. So that is one possible uh, reason as to why there is finance cost despite there not being any borrowings. And when we look at the current ratio, it has slightly increased. 2.29 has become 2.57. So that is possibly due to the increase in receivable days or receivables balance. Acid test ratio also doesn't look bad. Now, generally we consider an acid test ratio of around 1:1 being ideal. So this year it's close to that norm. But keep in mind that current and acid test ratio depends highly on the industry and the nature of what we do. Moving on to the cash flow statement. Depreciation and impairment of tangible assets 11.3 million, and the amount of assets we have invested for the year is only 1.2 million. So it's questionable as to why they are not expanding further or why they are not investing enough, right? And they have also sold assets and received 52,000, not a significant amount. Same goes for I'm sorry, I think I have explained this the wrong way. So the depreciation is 11.3 million and the purchase of tangible assets is 7.4 million and not 1.2 million. Sorry about that. But nevertheless, the amount that we invested in tangible assets seems to be lower than the loss in value, right? So generally, a growing business would, purchase tangible assets which is generally higher than the amount by which it had got depreciated, as well as the disposals. When it comes to intangible assets also, the impairment or the amortization is 2.4 million, but the purchase is 1.2 million. So intangible assets is not a big concern. There has been some disposals and this year there's a loss. Last year there has been a huge profit. And we discussed about inventory, trade receivables and payables earlier. So cash flow seems to be fine. So there's a net increase in cash and cash equivalents of close to 6 million during the year. And if you look at the operating activities, well, very healthy cash flow, 16.9 million, right? And after making all the payments, well, you have a net increase in cash and cash equivalents of 5.9, and you have a substantial cash balance of 24 million. That's almost half of the tangible asset base that we currently have. Right. Then looking at the tax regime. So nothing out of the ordinary, right? These are the general points that are given for almost every OCS pre-scene. The tax rate seems to be 20%, right? So this is applicable for the taxable profits, and when calculating taxable profits, there are some expenses that are not allowable: accounting depreciation, amortization, entertaining expenditure, donations to political parties, and taxes paid to other public bodies. So expenses such as accounting depreciation is decided by the business, and the tax department may consider it to be a biased amount, right? Or the business can come up with an amount that would favor the current year situation. So instead of that, the tax department would allow us a particular amount, something called the tax depreciation allowance, which is 25% per year on a reducing balance basis. So when calculating our taxes, we need to add back these expenses to the accounting profit, but we are allowed to deduct the tax depreciation. And we also see that tax losses can be carried forward to offset against future taxable profits from the same business. So we are not clearly it has not clearly mentioned for how long, but we can assume that maybe it's forever. And certain other taxes that you need to be thorough with: value added tax, nothing mentioned about that here, and also capital gains tax, right? So whenever we sell off a capital asset, it would give rise to capital gains tax.